What are the important points for buying life insurance? There are so many permutations of insurance policies that it is difficult to nail down any certain things to bring to your attention. However, as to general categories of insurance, it is important to know the difference between whole life and term life insurance. The difference is the biggest cost differential in coverage. Comparing term life to whole life is like comparing a hamburger with only ketchup and mustard on it to another burger with lettuce, tomato, cheese, bacon, ketchup, mustard and mayonnaise. Term life is pure insurance. You pay a premium, your beneficiaries get paid when you die. That's it. A whole life policy is a managed policy. Some of your payment is put into cash value. Some is put into market investments and other financial instruments to earn revenue for you and for the insurance company. Handling you, your money and your account involves a labor cost to the insurance company. Think of it like the cost differential in labor and materials for making the simple burger versus the maxed out version. While building cash value and interest on investments sounds good on paper, the truth is, if you took the difference in cost between a term and whole life policy and put it in a CD or money market account, you will realize a similar return, without the cost of the insurance company managing it. Insurance agents want you to buy a whole life policy because of commissions and revenue for the insurance company. They are hell of a salesman too, painting a glorious picture of returns and cash values that make whole life look like you are getting cash back on a credit card free value. Nothing could be further from the truth, because for most intents and purposes, whole life is a rip-off as far as pure coverage goes. If you want economical coverage that pays the full ticket upon your demise without a lot of whistles and bells, term life is the only way to go. I agree with her advice to choose a highly rated company, Best's ratings, Standard & Poor's ratings, and choose an agent with a CLU Chartered Life Underwriter charter for excellence and character. I want to add a few thoughts. Although you are insuring your life, your overall health is the primary consideration in the underwriting process. Other considerations include your vocation, avocations, age, and debt net worth, as well as existing amounts of life insurance. And, while most people will not die prematurely, many people will develop medical issues over time that will ultimately prevent them from qualifying for a top-tier life insurance policy, or qualifying at all for any policy that requires underwriting. If they do qualify later in life, the premiums will definitely be exponentially higher. You can purchase cheap term that is not convertible to permanent, but that is not the best solution to the likely scenario that you will live a long life. Therefore, if you are young and healthy, seriously consider the purchase of the maximum amount of life insurance that a top company is willing to underwrite on your life. If you can afford the premiums, purchase permanent whole life coverage. If your current budget will only allow you to rent life insurance coverage for now, purchase a term policy that can be converted into permanent without additional proof of insurability. In other words, a rent-to-own policy with the initially lower term premiums that you can convert to a permanent policy in a few years. These policies are good for young professionals, i.e., medical resident, whose income is likely to skyrocket in a few years, i.e., surgeon. The richer you are, the more you need life insurance. The older you are, the more you need life insurance. Conversely, the younger you are, the less likely you are to be rich and the more likely you are to qualify for life insurance coverage. As a result, the most important consideration in choosing a private, not group, life insurance policy is your ability to plan for the future without the benefits or consequences staring you in the face this moment. If you find a quality company and agent that you like, work with her or him to craft a policy that will meet your needs for the short and long term. May you have a long and happy life. Choosing whether you want term or whole life for starters. Term is going to be a lower monthly payment but lasts only for a specified amount of time, 20 years being the most popular. The thinking is that for young families, your financial obligations will be less in 20 years when your children are grown up. The downside is that when the term is up, either your policy expires or you can continue at that current age with a new premium monthly payment, which will be considerably more because you would be that much older. Whole life is what it sounds like, good for your whole life. The upside is that the policy lasts as long as you pay your premiums and will never expire. These policies also build Cash value. Somewhat like a savings account where you can pull money if you need to. The downside here is that it is more expensive. If you are younger, you can have a policy that could be paid up at a certain age. I have several clients that have whole life policies that they will be done paying on at age 65 or so, and the policy lasts until age 120. Taking into consideration how much income you want to protect is a good place to start. There are online life insurance calculators readily available. This is a good one. Calculate your needs. Life happens. I always tell my clients that getting something that fits your budget is super important. One of the living benefits of life insurance is peace of mind, so getting a policy that you can afford is very important. If you are awake at night worrying about paying the premium, it almost defeats the purpose of getting life insurance to begin with. Lastly, working with a broker you trust is important. A broker will be able to shop the entire market, help with questions, and help you make an informed decision. This is an ongoing relationship, not a sell and walk away type deal, and anyone who doesn't give you their time and attention shouldn't be worked with.